What's going on, everybody? This is Pete and this is Lucci with the Sang Lucci crew here. We are putting on a show for you today on giving you the outline for how we made our 230K trade. I actually think it might have been a little bit more than that, but whatever, that's minor details. But anyways, before we get started, I want to make sure everybody understands and knows that we have a couple things going for us, okay? In terms of what we're doing with Sang Lucci in general, we have a public chat room that I run. Come check that out at sanglucci.marketfly.com. And also we have a private Twitter feed that comes along with that too. Okay? This private Twitter feed, has just recently been rolled out. All right? It's part of the public chat room, and it's really, really helpful for those who really want the ins and outs of how we're entering in a trade, things, specifics that we're looking for on the trade, all that kind of stuff. And it's also for those of you who can't be in the chat all day. At least you can check Twitter and see what the heck is going on, okay? In addition to that, we have a special rolling out as well. We have a Sang Lucci Scholarship that is coming out, okay? Make sure you email Charlie at sanglucci.com, all right? You're going to have to submit a resume and pretty much say why you deserve this
Yeah, let me give some tidbits on that one. So, guys, we did this scholarship last year. I don't know if you guys remember it, but basically what we're asking you guys to do, and our winner from last year, he might even be in here actually. Go look at this chat room and see if Victor's there. Okay, our last year's winner was Victor Ronowski, and he got a free lifetime membership to our 12-day comprehensive course. So he can come in and use that whenever he wants to, and it's a $2,000 value. So he definitely got, a lot out of it. And we're going to follow up with him to do, another interview to see where, he's at on his trading. But basically, we're offering it again, and what we're doing is giving a free enrollment to our 12-day course, again, which is worth $2,000. And basically, what you want to do is write in 750 words or less. We want to know what your trading experience is from top to bottom. What goals do you have to, what goals do you hope to achieve through trading? Answer this from a financial perspective as well as a personal perspective. What are your expectations and preconceived notions about trading? Provide an example of a sacrifice that you have made in the past for an important goal. And I actually put that one in there because I thought that was very, very important. Provide an example of a time where you lost or failed and explain how you reacted to it. I put that one in there too. And then how does free access to our course fit in your plans to achieve the goals? And guys, the inquiries or the inputs that we got from everybody in the past, a lot of them were really heartfelt. A lot of you guys are some hustlers. You guys have all kinds of jobs. Some of you have started your own businesses and you're trying to trade on the side. So we got to know a lot of our subscribers. And some of your stories were pretty impressive, man. So we did enjoy doing this before, and we're doing it again. All right. So make sure you get out to charlie@sanglucci.com. Applications are due by midnight on Tuesday, April 16th. Okay. So remember, April 16th, and we will announce the winner in our webinar on Wednesday, April 18th. All right. And the April class, for the comprehensive course, it starts on the 22nd. Okay. Now, Peter is going to, text all of you guys the actual blog post where you can get all this information, and you can make sure you know exactly, what questions you need to answer and everything. All right? So, without further ado, let's talk about this LinkedIn. First of all, before we talk about it, did any of you trade this thing with us? And then, more importantly, did any of you trade Netflix on the short side? Did any of you actually catch the Netflix short? That was a doozy. That one, I have to say, was better. Was 10 times better than this LinkedIn. It was kind of the same setup, and we're going to go ahead and talk about it right now. So basically, what we want to do today is outline the idea for the trade, and then we want to bring it down to a shorter time frame, and then we also want to show you our actual trades on it, show you some options charts as well, and then show you the differences, between the Netflix trade and the LinkedIn trade. This was actually a trade that I talked about too. To my students as well. It's a very important trade. So what happened here on this LinkedIn? First, always want to take a look back at, the history, like what's been really going on this stock as of late. So if we go all the way back to when this thing IPO'd, I don't know if you guys remember when it IPO'd, the pre-IPO price was $40, I believe, wasn't it? It was $40. I think it was $40, right? Stock opens at 80. Okay, stock opens, I think it was like 81 or 82. It went to $1.26 that same day, or maybe it was $1.22. $1.22 that same day, washed everybody out of this thing. I think everybody was kind of upset with the whole social marketing IPO. So Facebook was a flop, Groupon was a flop, Zingo was a flop. All these social networking IPOs didn't really do well. And then later on, 2012, and then beginning of this year, this LinkedIn in particular, this one really just took over. Earnings call was right here, so let's narrow down on a 6-month. This was an earnings call similar to Netflix here. They both popped on earnings, and then they both just kept going. Okay, they both just kept going, and then you have this stall out here. Okay, you have this incredible stall out up here because again, after you rip 100% on the stock, people got to figure out what the next move is. And remember, smart money is going to try to get you on the wrong side of the trade in these big consolidation areas where everybody is watching where the next breakout is. Okay? Now remember, there was upgrades on this. During this, through all this consolidation, there was still upgrades on this LinkedIn, and there's still price targets that are over 200 on this thing, right? And then the same thing happened in Netflix. If you notice, Netflix was very similar. There was an upgrade right here. Facebook integration here, everybody goes long, and they all get smoked, absolutely destroyed. Same thing happened in the LinkedIn, although it wasn't as extreme. And then you realize that LinkedIn still has plenty of buyers just sitting around, just kind of waiting. But the same thing kind of happened in here. So what the smart money is able to do is push these things to the high ends of their ranges to get most retail money and most dumb flow in long. And everybody's going for that $200 roll. And then all of a sudden the market drops out, everybody kind of gets shaken out of their trade. So this, I'd imagine, this 170 break, this is where you bury all the stop losses and get rid of all the, the weak hands on the long side. And this happens, this is the ebb and flow. This is the natural flow of how stocks move. Once things look too obvious on one side, there's got to be a couple of shakeouts or, a couple of nasty shakeouts, to get most of the retail dumb flow out of there. And that's just kind of the general way it works. So now let's go to the 10-day time frame. This stock kind of held up around 175, 176. And then April 1st, this was when we got to talk about the market as well. So what was April 1st on the market? Market dropped out. This was kind of just a random dropout. I forget what the actual news was here. And this was when we kind of were attacking all-time high. And then the day after, we just kind of dumped all the way down to 155 on the SPY, and that was the catalyst for the LinkedIn move as well as the Netflix move as well. So I saw this first. This is what got me interested first. Because again, you see this range, you see people holding up 175. I saw them dump all the way down to 172. I'm like, all right, okay. Maybe this could be a decent trade here. And then she kind of just stalled out for a while. Now, I'll play this consolidation. This is very important here. I will play this consolidation, and it's important to look at what your option is doing as well. So it's important to pick the right option here. So this right here is the weekly option, okay, that expired on the 5th, all right? Now, usually for me, I will play a weekly if I know by looking at the tape that move is going to happen today or tomorrow or very, very soon. Or I'll start messing around with a weekly. Now, this was Wednesday when it actually really dropped down. I started messing around on the 1st and the 2nd. So I started buying 100 contracts here and there, all around $1. So you notice, this thing was just kind of chopping around $1, 70 cents all the way up. That morning it opened up at 70 cents and then just ripped. Absolutely ripped, because you saw the stock made a quick attempt at 174 and then just swept down. If you were looking at the tape during this time, it was absolutely ridiculous. It was just panic selling all the way down to about 170. As soon as it hit 170, I knew I could get my move down to 165. So I started buying in heavy. My cost was about $1.37, guys, and I had 1,100 contracts. I had 1,100 contracts. Guys, I'm starting to trade a lot more. I'm starting to trade a lot bigger size. So I had 1,100 contracts, right, at a cost of, let's see, at a cost of $1.37. So how much is that? That's about 150 grand, okay? So it's a 150 grand position, all right? Now, I figured 165 was like a good out. In my head, I was like, okay, if I get 165, I was thinking $5 because obviously I'm in a 170 put. If I get to 165, chances are I'll be able to sell at $5 because it's 5 points in the money. Simple math. I was like, all right, if I get $5, I'll go ahead and take it. Now, is that what happened? No, no. So I saw this thing dump through 170. I was like, okay, I'm going to get my move here. And then through all this consolidation down here, I started to get a little bit greedy. So what happened was I didn't have too much time to get the $5, and I was like fixated on that $5 sell. I couldn't let it go. So I was selling through a bunch of this stuff, and I held 600 contracts overnight. Okay, I held 600 contracts overnight here, guys, because again, I was looking at Netflix. And look at Netflix. Netflix had that one-day drop on the 3rd. And then it just kind of, it was just weak the rest of the week, you know. And it had several days move, right? This thing went from 190 all the way down to 165. And I figured, okay, you know, this Netflix really tanked. I figured at that point, I figured this LinkedIn would get down to 160 even, right? So I got a little cocky. And I didn't sell all of it, you know, up here above 4.5. So I was up, guys. And let's do the math here.
We're up about a little over 330 G's.
No, that was much more than that, Pete.
Yeah, I know, it was around 400. I'm lowballing it so you don't sound such like a douchebag for not taking this money.
So
I'm the risk manager back here, guys.
450, okay, right? So 450 sell, which was totally conceivable, guys. Totally conceivable. I could have sold for, again, minus 150,000, and this would have been the profit. You know, that would have been the profit right there. Which is again, that's absolutely absurd. We were actually up more than this, and you know, to give up that, and I ended up making about 200,000 because what happened was I sold a bunch at 4.5. I did sell a bunch at 4.5 and $4. I did, and then what happened was I held overnight, and then I ended up selling it around like $2.5, $2, and then the last couple hundred down to about 1.5. So you know, I was able to book plenty of the gains here. You know, but again, I was waiting for that next leg that just never came around. Plus, you got to think what the market was doing at that time. We had that big dropout, and then, you know, look at all this. Now we're right back to all-time highs. So, you know, this LinkedIn kind of caught that buyer, still had it, and, you know, I never really got it. Oh, yeah, hang on.
What is the takeaway from losing $100,000 on a $300,000?
It was more than 100,000. It was 200,000. We want to get specific, all right? So what I want to show you guys is the actual orders here, and just to show you, you know, some little tidbits of how I trade aggressively sometimes. Remember, this is the following day, so this is when the day is actually happening. At this point, I had already bought about 400 or 500 contracts, so I was already long 500 contracts or so. The option kind of swept down on me to like 70 cents, and that's when the stock ripped to 174. Let's show that here real quick. So right off the open, you'll see this thing. Yeah, so you see this blip up here to 174. So they kind of shook some of the weak hands out, and then I saw this seller on the tape, and then it was just market order selling the whole way down, all the way down to 170. So as soon as I saw that, I was like, all right, that's it. I got to get the hell in this thing. And this is me buying, all right? So what I'll do is, you'll notice, I'll send out orders of like 25 to 50 when I want to get executed and when I want to get a lot of contracts, okay? Now notice, execution quantity sometimes is a little bit different. So sometimes I'll send out 25 and I'll see some of it getting filled, and then I'll yank the order at the same time, okay? So all I'm doing is just throwing out these orders, trying to get fills here, and then just kind of slowly working in and out of this thing. Because again, if you aggressively hit the offer on any kind of option, that market maker sees you coming a mile away. So you have to kind of play games with them, and they're gonna push this thing up and down again to shake people in and out. So as we continue, look at all these orders. If you add all this up, this is ridiculous. I'm even looking at that. Look at this. These are all buy orders, guys. These are all buy orders for 50, 50, 50, all the way up to $1 and change. And now look, I'm still buying up here at 2.5. Remember, my option, okay, my cost was well down at $1, okay? But now when this move starts to happen, I don't mind paying up, and averaging my price up as long as I see the continuation on the tape. So if my tape is telling me, all right, this thing's got a little bit more to go, then I don't mind averaging up on this thing, okay? And if you notice, I averaged the shit up on this. I'm buying 150. I'm buying 2.5. Look at this. I'm even buying a little bit at 370. Oh, and guys, you get a little treat right here. Pete, you remember this? This was the 10 contracts we held overnight on Netflix.
Oh yeah.
Guys,
oh, yeah,
guess what our cost on this one was? $2.30. Our cost on this. A measly 10 contracts. Guys, if I had 1,100 contracts of Netflix, I don't think we'd be having this conversation right now. I'd be on a beach in Tobago, with a nice brown skinned lady next to me. It's shit, man. Anyways, so here's me selling. You see me selling at 420, 410, and this is all throughout this chop right here. Okay, so you're seeing tons of chop here. You're seeing me selling all throughout here. Look at me selling 480, 485. These are good sales up here. These are really good sales. 490 up here. I was able to get 480. Look at me. I was able to get 20 off at 520, even 505. So this is me, again, just selling small amounts. But again, you got to realize I got 1,100 contracts. So I was able to dump about 500 of them, and then I held overnight like a dumbass. And unfortunately, I don't have the next days of trading there, but you'll see me shamefully, selling out at $2.50 and $2 like a dumbass. All right, so that was the LinkedIn trade. Let me go ahead and field some questions here. I know Peter is probably answering a crap load of questions here for you, but let me go ahead and answer some of these questions. CV is asking, are you canceling the orders manually? Yes, absolutely. So I work off of these level 2s. So all I need to do is click X or escape or whatever, and I cancel them manually. Yes, absolutely. So I cancel them manually. I do not use fill or kill orders. The only times I use fill or kill, actually, to be honest, I never use those orders. I want the I want the control over the cancellation of that order, because chances are, if I'm buying aggressively on the bid, and I want stock or I want contracts, then I'm going to keep that order out there if it didn't get filled. So, let's say I limited 150 and the damn thing ripped to 170. I'm going to keep that order out there just in case, I get a dip back and maybe that order gets filled. So I'll keep those orders out there, and I'll make sure, I do monitor, how many orders that I do have out. Okay. Who do I route to? Bro, we got all kinds of stuff here. So, there's all kinds of different routes. You guys got to realize that for the direct market access guys, for the guys who are, you really have control over your order routing, each one of those exchanges, they cost different amounts. So oftentimes you got to find the best relationship for you and the best route that makes the most sense for you, or, in which case you get the most rebates back. A lot of you guys are not sure of what the hell I'm even talking about with the make or take rule and rebates, but that's something that we'll talk to you about when you take our class. Those are kind of the advanced things that we talk about in the class.
And we are rolling out material for you guys to actually study up on that, so make sure you guys check out sanglucci.com and all that. Lucci, give them the takeaway for...
Oh, the takeaway. All right, here we go.
What happens so when you see these numbers?
So the takeaway is, I'm a dumbass. I think that would be the gist of the takeaway. I think that would be the gist of the takeaway.
The takeaway, guys, is that you don't want to be clouded by the actual P&L that's in front of you.
You don't.
Again,
you don't.
If you're in size, a lot of times you got to get out with size, and you have to come to terms with, profits or whatever is there.
I came to terms with it.
I just wanted more.
I wanted more.
We were all actually in the mindset of making the $500,000 the next day, because we wanted to risk $100,000, $150,000 worth of profit that we were going to lose.
Right.
We had come to terms with it to actually go and make the risk for the next day there. But again, guys, that's just the way we trade.
Yeah.
So make sure you guys understand your risk tolerance and the way that you trade, so you're not always worrying about the overnights and all this kind of stuff. We got people telling us take days off when you're trading and all that. No, we're not going to do that. The way we trade is that we lose money because that's the cost of doing business for us.
Yeah, that's how we trade.
We have to suffer. We have to suffer in order to make big gains. Again, that's the way that we look at trading. That may not be the way you look at it, but again, guys, the takeaway here is make sure you manage your risk properly, and make sure you know what the hell you're doing in there.
Right.
Especially when you're trying to size up and becoming a more and more successful trader.
Right. Make sure you know what basically what he's saying is make sure you know what your style is. You have to know what your style of trading is. I mean, mine happens to be pretty freaking crazy at the end of the day. It happens to be pretty crazy. So I will take a lot of risk if I see something nice on the tape. CV is asking, did you use leverage on this? No, absolutely not. When you go long options, you don't want to use leverage. Even if you're being offered leverage to use for going long an option, you don't want to use it. You do not want to use it. Trust me, you do not want to use it. That is one thing you don't want to do. The only time you want to use leverage when you're trading an option is when you are writing contracts. That is the only time you want to use leverage, when you're writing spreads or you're writing naked, things like that. But if you're long an option, like let's say, CV, just to give you an example, let's say I'm long with 100,000, right? My account is only 50 grand, and my broker lets me go 2-to-1 on options intraday, right? And I put down 100,000 on this, and I'm freaking wrong, right? And I'm wrong on this. And you know how quickly these options move. So my dollar cost can go to 50 cents just like that. And then all of a sudden you're sitting on a margin call, and you used way more leverage than what your account size was. So that means you're losing more than what you were expecting to lose. Just from what you usually do. So these things are definitely something that you don't want to mess with. Options are already leveraged to begin with, guys. Let me just do some quick, again, for you basic guys out there who still don't quite understand the options. And again, we have a slew of different classes for you. Whether you want to do basic or advanced. If you have 1,100 contracts, you're going to multiply that by 100 shares per contract, and that's 110,000 shares of LinkedIn. That's how much exposure I had of LinkedIn. Now, you want to know how much it costs to buy 110,000 shares of LinkedIn? It costs what? Let's say it was at $1.70. It's going to cost you 18 mil. All right. So theoretically, with my position size, I'm already leveraged here. I'm already looking at an $18.7 million trade essentially, but I'm doing it through the options market. Okay. So essentially, if I bought 110,000 shares of the stock, I would make the same amount of money, but obviously my percentages would be significantly less. Okay, so you see how this game kind of works.
So Frederick's actually got a good question here. He's saying that we sometimes actually do take up anywhere between 25% to 100% of the options volume at certain times. Yes, that does happen, Frederick. But again, what you have to understand is that the only reason why we can do that, and sometimes it's dumb to do that, but the only reason why we can do that is because there's momentum behind us. We have the right timing, and we actually see the sellers and buyers there. Yeah. So the market maker, even though they move out of the way, there are certain areas that they have to fill us, and they're losing money on, and which is ultimately where we are sitting. So we want to make sure.
So Frederick, honestly speaking here, there's no possible way that you could build that size without understanding the timing. And you can't talk about timing unless you know how to read tape. So anybody who reads tape and anybody who can really assess buyers and sellers and understand when tape looks different and understand when there's an influx of sellers which is really going to depress the price and all that kind of stuff, that guy can handle this kind of leverage. That guy can handle it because he's got the momentum behind it, because he understands the timing of the situation. All these moves are timed so that most of you guys can't catch them, all right? Have you ever sat there and wondered why stocks just give you 1 or 2 days of clean moves and then they go into chop for about 2 weeks? It's not, again, that's not a coincidence. That's how the game works. The tape reader who understands timing, he can find those days more so than some of the retail guys. And the retail guys will end up swinging options, and they'll end up paying $2, $3 for an option that'll go down to maybe 50 cents or 75 cents before the move happens. Okay, before the move happens. And Frederick is saying, I've been wondering that for 4 months straight. All right, these are the intricacies of the market which we talk about in these classes. Again, I go after the big money, and and in reality, where I see the big money is off the fake outs, is off the places where they push in everybody to one side of the trade and they pull the rug, and that's where you get your big trade. But to time that move, you got to know what the hell you're looking at. You got to understand bid and ask. You got to understand buyers and sellers. You got to understand supply and demand, which is all concepts that we talk about in our advanced class.
MG, we're going to talk about selling premium on different webinars. Selling premium is a completely different discussion.
Yeah,
we take a whole lot of time for that.
Yeah.
That, again, is something that we teach in our advanced class. But, again, that's a completely different strategy that we run. Elmer's asking, when you guys are trying to get in and out of markets, do you still use limit or market orders? It really depends, Elmer. Because if we really like something, we're going to hit it on market, and then we're going to line the entire bid and have nobody there except for us.
Right.
But again, it really depends. We're actually going to be rolling out videos on how to properly execute your options, discussing just that, guys.
Yeah. So, I mean, just in general, it depends on how aggressive you want to be with it. You know what I mean? Or if you're slowly trying to build into it. So for Elmer, like if you're going into a swing position, for example, there's no reason you should be using a market order. If you're taking your time to build a position, long or short an option, or long a put, long a call, like you can spend the time to limit in between some of these things. You can sit there with, let's say you want to buy 10 contracts and you want to put it in between the spread, or you want to sit there and put it, at 27. So you can really spend the time because you're swing trading it, right? So you're not addicted to intraday every single second and blah blah blah. If you're trading stuff like this, if you're trading real breakouts and real breakdowns like this LinkedIn, I mean, Elmer, you see that speed is a necessity here, obviously. Just by taking a look at this chart. Once it's ready to go, this thing is going to go without you, and they're going to want to go without you. And you want to know why? Because why would a market maker want to write you all these options? Okay? Think about that. If you were a market maker, would you want to write me? Would you want to write a guy like me 1,000 contracts of this at $1.50 if you knew this was going to $5? Would you want to? Think about that.
All right, guys. Well, we're going to wrap it up here. Again, guys, make sure to check out the classes. Make sure to check out the link that I just sent out. These are, again, we do have classes for you guys. There's a scholarship running. Check out our free chat. Excuse me, the public chat. It's not free anymore. There's actually there's a 14-day period you can get it for $1, which is pretty nice.
Yeah.
You'll get access to the private Twitter feed. Again, guys, use us as a resource. We're here to make sure that you guys make the right decisions when you're playing options. Hit us up, Lucci at SangLucci.com, Peter at SangLucci.com. We're here for you. And over and out. We'll catch you on the next webinar.
Indeed, guys. Get those submissions in for the scholarship, and hopefully we see you guys in there. Enjoy your evenings, everybody. We'll see you soon.